Okay, I'd like to welcome you to my midweek commentary on the 4th of May. It is Wednesday. Uh, my quote today is just a quick little screenshot, and you probably can't see it, but the short answer is on a 100-point down day, the total gain on these accounts, so it's probably what, 6.8 million, was $5,657.48. Here's my question to the group. Is that good, bad, or it doesn't matter? Is that good, bad, or it just doesn't matter? What do you guys think? Good if you compare it to the indexes, okay? Any other comments? All right. I'm just going to say I think that is good. Anytime you are beating the market to the downside, you are significantly farther ahead. What do I mean? If I was to take 6.8 million and multiply it by the loss today, S&P 500, and that's usually the S&P 500. I'd multiply it by 0.0059, 0.5%, ish, right? What does that come out to? What does that come out to? A lot. $40,120. Plus I'm up. $5,867. For a difference of, I'm just going to say 46K. More money to make more money another day. If you were to take a 4% loss, like the last 4 out of 5 days, right? Last 4 out of 5 days, markets are down 4%. What is 4% of, I'm sorry, it's about 2.5%. What's 2.5% of 6.8 million? That's 170 grand. I'd have $170,000 to make more money with than the people that just had it disappear. Well, Kevin, people don't just exit their trades for a loss. I'm sorry. I'm going to disagree with you. I had a gentleman that tried to argue with me and say, well, Kevin, it's down one day, it'll be up the next. Unless you're a day trader. If you're a day trader, it's gone. And unfortunately, with so many people worried about another 2008 coming, which I think they have good reason to be worried about, yeah, there are people that day in and day out are booking losses in their portfolio. They are just saying, enough is enough, I'm done. Does that mean they booked the whole 2.5%? It does not mean that. But what it does mean, and it's what's going to bring me to my next point, what it does mean is there are people that are down 15% or more year to date. And there are people that I have talked to prove to me that they are down 15% or more. For that reason, and partially because I'm so busy during summer this year, I think I'm going to go to a little different type of trying to keep in touch with you. I think more people are going to need a more constant, every other day, or every down day in the stock market, they're going to need more of a, hey, what's going on, what are you doing, and why type of mentality or thought process. So, I am going to make a quick suggestion that some of you jump on to go find me on YouTube, or find me on Twitter, or jump onto one of my websites and just click on my social media, because I'm going to start sending out smaller, I'm going to call them best of the best in today's market, 10-15 minute little blurbs, little pieces that go out. It will involve some positions that maybe the safe options strategies group is not in, because of some of who I trade for. But I think it's going to give you guys 2 or 3 or 4 times during the week to hear from me. I also will probably post more of my midweek commentaries. I'll probably shorten them down to more of a half hour, where I'm just going to tell you about the market, because through June and July and even through August, I'm ridiculously busy. I never thought I would be this busy, so I'm going to need to spend some time in different ways to make sure you have access to me, you can talk to me, and so forth. If you want to be signed up, let me know, and I'll stick you on a Twitter feed or on a YouTube, have you subscribe to YouTube, so that way anytime they're posted, you just get them and off they go. Alrighty. I want to show you or make a comment about another position. Let me go to my account. I got a little slush something or other going on. For crying out loud. How am I going to do this? Let me start out by asking, is anyone in the Amazon trade? Or even the Home Depot trade? Because, well, let me go through Amazon first of all. I think Amazon could be a really, really good position. So give me a quick second. I grab a quick snapshot. Okay. I'm going to do this a little bit different. Taking a quick look at our charts. Technically, bearish indicators, but today we bounced off of the 50-day simple moving average. In which case, do we still have a little bit more to go to 500? Yes. But we literally seem like we bounced off of 17,600, and or you could call it the 50-day simple moving average. In which case, what would you like to, well, let's validate it. S&P, even closer, technically bearish, but it really bounced off of the 50-day simple moving average here. And then, of course, the NASDAQ is technically bearish, no bounce off of the 50-day. They are basically technically bearish and approaching a 10% correction status. So obviously technology's taking it on the chin. Taking it on the chin for the most part. Yes, we're down for the year, not dramatically, but we are down for the year. If I go to CNBC on the NASDAQ, you know, a year-to-date return being down 5.65%. But it is approaching that 10% correction from the highs. So what do I mean by all this? I mean, we might see a bit of a bounce tomorrow. Why is that important for us? Amazon. If you have not gotten into Jeffrey's Amazon trade, the Amazon 635, 640 bull put, I should say May 16 bull put, has 15 days left in the trade. And when I say 15 days, I mean 1 Friday, 2 Friday, 3 Fridays. So it's 1, 2, 10, 11, 12. You literally have 12. I don't mean 15. I mean 16 days left in the trade, or 12 trading days, with Amazon closing at, Amazon closed at today, oops, sorry, figured I'd get this a little bit more prepared. Amazon closing today at $670.90. So, couple questions. How much of a buffer do we have? In the money, bull put spread. 30 bucks, there you go. $30. And today, you can get 70 cents per contract, which is better than Jeffrey's 40 to 45 cents. Well, why is that? Well, Jeffrey put it on, and I decided to sit and waited to see how Amazon reacted. And because I didn't put it on at the beginning of the market drop on Monday, using a credit order just meant you got filled with that credit, and then you could have gotten over double the credit of 40 cents on Monday if you were able to literally pick a bottom on the Amazon movement. But the Amazon bull put spread can give you a 77-cent contract on $5 of risk with a $30 downward cushion on Amazon, which is about 5%, a little less than 5%. Great trade to be in, a great opportunity, and I really like it because I see tomorrow a possible bounce, or the next day a possible bounce on the Dow, and especially on the S&P with the 50-day simple moving average. It might be one where it might be a good opportunity for an Amazon bull put spread. Looking at the chart, I like it even better, and I like it even better even in a down market, which really you're not supposed to put bullish trades on bearish markets. That is a no-no. But we've got our gap up at 652. You know what? Let's just go ahead and let's just draw out our chart. See if my flash is working today. Kind of slow. It's initializing, it's loading. So, taking a quick peek on a horizontal level, look at that. At 660, 662, we've got some kind of support that today it hit and stayed at. It was able to hold it. I think this. I think it bodes well for being in Amazon. I mean, literally, it hit it and it bounced back up higher today. Where's our level that we have to worry about? Where's our oh no level? Oh no, we're in trouble level. Well, it's at 640. And the reason why I like it is because past resistance, past resistance, past support, past support, past support. It just technically seems to line up well. Now, we need to remember where we are in this week, because this week is not one of the best weeks. I will be the first one to tell you. It's just not a good week, and the reason why is it comes down to nothing more than welcome to being in the average work week, where we look at how bad or good the last month was, and it obviously is not one of the better months. We've had some issues in our stock market. We're not in one of the better months of of economic growth. Earnings is kind of starting to fizzle, so we only have 2 more weeks of earnings, but earnings has not been moving the stock market. But again, we're looking for that one up day, and you can exit the trade and with a cushion to be able to get out pretty decently, I think, in an Amazon. Any questions on the Amazon bull put trade that Jeffrey and I talked about or looked at, that we just looked at right here? It's about a 5 1/4 risk to reward. Get 75 or 77 cents, maybe even 80. You can make it a complete 5 to 1. All right, this week, what's happening and why? Someone tell me, as I just put in data, as I had to snap a picture of this earlier, what's happening this week and why? Where is that? Non-farm payrolls, but that hasn't happened yet. So what's happening this week so far? Tell me, what's happening this week so far and why? I can think of 4 distinct things that are moving our markets lower. Any idea? If you don't have any idea, don't hesitate to just put a couple question marks in. But what's moving our market this week and why? Japan, not that I know of. Guess that doesn't mean it can't be, but that's a good guess. China, worse than expected growth, PMI, manufacturing numbers, carryover from last week. We had the all global manufacturing numbers / cuts on Monday for a weaker global growth outlook. Less than expected revenues, I should say top / bottom line, and guidance for earnings. Already knew the S&P was going to be down year over year 9%, so we're still having less growth on our S&P earnings. Go ahead and run the last week's and look at the chart between S&P earnings versus stock market growth. A wide variance doesn't make a whole lot of sense. You'll probably have to see that contract and come closer together. And what was the last thing? Unbelievable. ADP employment numbers missed big. So kind of funny. Bad news is bad news right now. What's the bad news about or for? I don't know. I took a picture of the chart. In all honesty, if you take a look, Monday ISM index was lower than expected, wasn't great. Construction spending was lower than expected, wasn't great. So of course, Monday we should have had our down day. What happened in the stock market on Monday? Monday, our down day, what happened in the stock market? It was up. It was a bounce off of 2 days of being a little bit oversold. In fact, if you look at a technical chart, and I'm going to say the S&P or what have you, it bounced literally right off of a round number. That's 17,800. Ooh, Maud, I love it. Great point. First day of a new month where institutions put money to work. You are exactly correct. I knew that on Monday. I did not know that today. I forgot it. But Monday, markets were up. Tuesday, great auto and truck sales, but earnings brought our numbers down. Wednesday, ADP employment, 156 versus 205. It should have been a reason that the Fed's going to hold their hands. It gets worse. Productivity was down 1%, now it's down to 1.9. Unit labor costs were 25% more expensive at 4.1 versus the expected. Actually, it's worse than that. 2.6. So unit labor costs were like 40% more expected than you wanted. Trade balance a little bit better. We're only upside down by negative 40.4 billion. Factory orders up big. ISM services up better than expected. Our news today should have caused us to go higher. It looked like we were going to. If you look at a daily chart, it's rather interesting. We have the big drops down from futures, mostly caused overseas, and then we play catch up. But very interesting. What probably moved our markets down today and our drop? It's Trump. Cruz quit. We don't have a Republican established candidate. We've got someone that shoots from his hips. We've got someone that's not an established politician that I guess has a pretty good shot of becoming president, where he can't be bought. There's no friends, good old boys slash, hey, you owe me for something I did before type of opportunity for him. Our markets are down due to the uncertainty, the lack of a platform, and the fact that, oh my gosh, a billionaire that joined the presidential race to make a statement or a joke now has won the Republican nomination, has a clear path to get it done. As soon as Cruz mentioned that he was suspending his campaign, boy, you saw some futures start to fall. It's speculation right now. It's speculation. I'm just going to tell you, if I was to go down to how I'm trading today, I'm very thankful that I kept my long puts on, especially with the sell in May, go away mentality right now. Every year I find myself giving myself an opportunity to talk myself into believing or thinking we can have an up May, and there's some Mays that are up. And then you get the huge sell-off in June. The huge sell-off on June this year could be caused with a FOMC rate hike. And I'm going to tell you right now, and you can put me on the record, there will be no rate hike in June. With a Britain exit potential out of the euro that depends on a general public vote, There's no way the Fed is going to raise interest rates again or in June with it being an election year, with having Britain possibly leaving the euro. So the exit will more than likely come in July. Which means if we get a rebound, I'm going to play the rebound more to the upside. And close to around 18,300 on the Dow or 2140-ish on the S&P. I'll look to possibly start to reposition long puts again, but a little bounce up, and I think I am going to run more towards the upside and see if we can't let some things run in May. It does not mean I'm right, but it would shock me to see any type of action from the Fed would shock me. And some of you might say, well, Kevin, when you least expect it is when they do it. That's true, but with all the global ramifications for higher interest rates, we finally have the devaluation of our dollar a bit to make things cheaper overseas. Again, I would not be playing a sell in May, go away. With that said, yes, I am saying our market's going to end down one more time this week. Yes, we'll bounce tomorrow. It might be a pretty good bounce tomorrow. It could be a couple 100-point bounce tomorrow, would be my expectation or my thoughts. Of course, I'm saying this still protected with long puts right now. And my fear or worry would be that we're going to have an average work week that's just going to continue ourselves down to the actual 50-day simple moving average, which we will sit on until next week and possibly see some better upward movements next week. We're in a pullback. We're in a pullback in everything except for, well, we're in a pullback in everything. 3 to possibly a 7% pullback here on the NASDAQ, but we're in a bit of a pullback. It's a breather for how far we've run, how fast, and so the market decides, hey, time to take a little break. Maud, I think there's two Fed heads were out yesterday saying maybe interest rate hike. Not sure why they do that, but I agree with you. I don't think, yes, there were two. Our two hawks were out saying, hey, we need more interest rates. Again, it's funny because only one of them voted for an interest rate hike in April when we didn't have an interest rate hike. So, for what it's worth, the Fed is becoming more and more political every single day. And rarely do you see the Feds even give any interest rate hikes during an election year, but we're doing it. So we're doing it, and we gotta be careful that we take care of it. So let's see here. I'm going to keep on going through. We do have some earnings coming up. I'm not sure if anything will move our markets. We do have Pfizer this week. Merrick, where's the one I was looking for? Duke Energy was yesterday. Monster Worldwide, Kellogg's, Herbalife, Triple D. There's a spattering of earnings, but nothing that I see that says it's going to really move the needle one way or another. Economic reports, obviously, average work week at the end of the week, that'll be the big push. Internationally, not much more is going on. For lack of a better term, Japan's manufacturing won't matter. Obviously, over the weekend, we'll have merchandise trade from China and the Bank of Japan minutes. We'll see why Japan chose to hold pat. Our futures on Monday will be decided upon by the Sunday economic reports. Looking to trade, still grateful that actually, let me put it this way. Disney's going to make me look really good. Disney's going to post some significant earnings. I will have to short puts against long puts like I'm doing on Facebook right now. I've got short puts on Facebook at 115. For those of you that might be in the Under Armour trade, Jeffrey had short puts on. At the time, it seemed like the thing to do. At the end of business today, we were trying to get up there and touch that $40 mark, but Under Armour just couldn't seem to do it. After hours, it's up it was up a couple cents not too long ago. It's the right thing to do when you can, to short puts against a bullish moving stock. Unfortunately for Under Armour, a downgrade and a couple key chief merchandising executives were leaving that probably should have been stated or stated more clearly in their guidance, but it did not happen. So Under Armour's in a bit of a worry if you are in the Under Armour trade with safe option strategies. But the good news is, and it's what I told Jeffrey today, man, you can roll short puts for forever. In fact, I rolled short puts on BlackBerry back in the day, 9 months worth of rolling short puts. When it was all said and done, I was looking at a net $72,000 credit. And out of that credit, my profit was really only about $1,400. But I had rolled for 9 months until I could finally exit short puts at a profit on BlackBerry. And it was a pretty easy thing to do. I could have, and I did not do it, but I could have added long puts to offset some of the losses on my short puts. I did not do it, but if I had to do it all over again, I would also look at that opportunity. But the world is not over with Under Armour. In fact, expect this to be a buying opportunity, and expect should be a pretty good bounce back on Under Armour, especially with the earnings that they had. Guys, any questions you have? Any questions you have that I can answer for you today? Or anything you would like to look at? What's going on with Baidu? All right, Baidu had great earnings. It should have been up to 200, but Baidu was investigated because Baidu does advertising for medical firms in China. A medical firm advertised a treatment for cancer that said it could possibly help. It did not say it would cure cancer. It did not say that it would cure a patient. When you have cancer, the odds are pretty grim. And I am saying this from having 2 family members that currently have cancer and one that's in remission. One family member that's in remission, one family member that currently has cancer, excuse me as I'm restating that. And this student, this 21-year-old student that bought this stuff online ended up dying. I'm not going to make light of the situation, but I am going to say this. It seems like in our world today, we're always looking for a scapegoat, that it's someone else's fault that life is tough, that life is hard, that I got fired from a job, that things are so tough. And so unfortunately, the family is suing, and then the government got looking into it. And basically what's happening is someone has died that had cancer, that was taking a medication that was supposed to have helped, and it did not. It should be a buying opportunity on Baidu. I almost took my long puts off today to cash them in, keeping the short calls on, but I wasn't yet comfortable. I really could not see a level that I could turn around and say, hey, you know what? Baidu's good to go. Baidu's going to run higher. I totally would have expected it to have some issues up around 200, where it would have given me the opportunity to roll some short calls and start to short short some short puts against my long puts. But in real life, we're just holding on to the 200-day simple moving average. Probably even more so, we're holding on to about the 75, excuse me, the $72 to that 75, the $172 to the 175 level of support. Buying opportunity, I see another update tomorrow, and I'm at least going to start to short some puts down around 170 against the long puts. Is a commodities bull coming? Ida, I do not think so. I wouldn't. So, someone asked me yesterday about why I'm not getting into ExxonMobil, what my thought process was. And it came down to, hey, I would not be getting into ExxonMobil when the $60 to $75 a barrel expectation was supposed to happen in 2017. And then it went to 2018. And then went out to 2020, and now we also have some calls going all the way out to 2023 to where you're going to see oil get back up to $60 to $75 a barrel. Gold's back up above 13, Kevin, last week. Silver's back up above 15. I don't see it. I wouldn't be in oil because the expectation to get back up to where a lot of companies are profitable has an expectation of 2020 to 2023. So why would I sit in a position for 4 to 7 years till they get back to where they were at a year ago or so? I don't see a bull commodities market because I can't see oil, which is a big bunch of commodities. I can't see the materials by way of precious metals, which seem to be a big part of the commodities market, going much higher. We've had a lot of rain, at least for us back here in the West, which to me shows we're going to have better than average crops. I'm not a commodities expert. I quit my futures trading a long time ago, but I see no commodities bull market in the future anytime soon. Great question, Ida. Maud, what if the US dollar goes down? Would that not make commodities go up? No, Maud. The US dollar helps commodity prices go down lower. And again, it primarily comes down, in my opinion, to the fact that it's cheaper for other countries that are going against the dollar. When the dollar goes down lower, it strengthens their currencies. In which case, my belief, and again, I'm not a commodities expert, my belief, it would make commodities cheaper worldwide. Sidebar. 65 residents evacuated from Fort McMurray, the Kurth capital, the old sands, uncontrollable forest fires. Yes, in fact, I thought there were 80,000 residents that were being evacuated from the Fort to McMurray area capital. But again, some more bad news, people running for their lives. Abraham, so Trump is good for the market or not? No one knows, Abraham. It's uncertainty. We don't know if Trump is good for the market, and that uncertainty was causing the futures to go down last night. We don't know. It's uncertain. And because it's uncertain, and because he doesn't truly have a platform in place, it caused uncertainty in the market, and the market does not like uncertainty. For that reason, I think our market tanked pretty good. So right now it is uncertain. If you were to ask me, I would tell you I think Trump will be very good for the market because he will loosen up EPA regulations and restrictions on businesses and make the U.S. a more business-friendly environment, which will help out the stock market based on the returns of corporations. And Hillary, I'm just going to say, not being a Democrat or Republican, not being a male or female, trying not to be sexist and not giving her any credit or grief over her husband. Hillary would not be good under any uncertain terms because of the platform of an equal wealth distribution. When you take away the incentive to get gain, whether it's through taxation, whether it's through laws, whether it's through however you plan on doing it, we lose that competitive edge to make ourselves better as a country. And the change we felt, and not saying Obama's all bad because he was dealt a tough hand coming in, but the change that we felt, I think, has been proven that it doesn't work. And if I was Obama, and it's easier for me to say because I'm not in that power position, but if I was him, my legacy would be, hey, I helped keep the country together, and I would not have done any of the crap that he's put in for Obamacare and so forth. I know that helps a lot of people get insurance that didn't have it, but he took out that competitive advantage of having insurance companies be able to barter for our business. It increased costs on business that can or could not. The biggest thing, minimum wage. Minimum wage has never been proven as a viable way to help increase companies. You're paying again, a increase in minimum wage is an artificial boost to the stock market. It's people working the same job at the same rate, at the same production for more money. No better than quantitative easing. If you don't like the way the government's spending money now, why the hell would anyone vote for an increase in minimum wage? All it means is you're all going to spend more money to buy the same product at a higher price in the future than it's worth today for no reason whatsoever. And the only people that get the minimum wage that'll really get the increase are the minimum wagers. Does not help. It does not help in any way, shape, or form those of us that are not on minimum wage, where we're trying to earn a better dollar every hour, every week that we work. So I'm trying to stay not political here, but obviously you're going to see where my loyalties lie. I just wish we had someone that was a little more moral and a little more conservative than who we have campaigning against Hillary. In fact, if I can give you one more, mark my words, it would not surprise me in the least to see Hillary get indicted And on the Democratic side, it's not Sanders. It's really, you could see our VP Biden swoop in and say, hey, I'm going to save the party. He's very well liked by both parties on both sides of the aisle. He lost a son to cancer, if I remember right. So really the best Democratic hopeful that will have the best opportunity to work with Republicans to do more of the same, which is screw up our country. And the fault lies with the Republicans just as much as it does with the Democrats on a Senate, House level, would be Biden getting in. And I don't know, there's my conspiracy theory for the day. Maud made the comment, I'm not sure Hillary is that moral either. Well, she's definitely a liar, right? If you look at her tapes, I can't believe she called off and let 4 ambassadors for the United States die. I kind of think that's unforgivable. If she's willing to let them die, who else is she willing to let die here on her own soil? So there you go. I'm up on my high horse. I might have Jeffrey just edit out the last 5 minutes here. It's interesting, welcome to being in a position where we really don't have a good candidate. And I think the stock market is telling you that. I think the stock market is showing you that the uncertainty with whoever becomes president right now is downright scary. It's not looked on with any favor on either side of the aisle right now. And what a great example of having the best house in the worst neighborhood. It's like you look at the best candidates that are winning on both sides. Man, are those some ugly houses. The best house in an ugly neighborhood is still really, really ugly. And the market's treating it as such. Any other questions you guys have? Yes, I will vote for Trump, but I will do it with pinching my nose. But I like the idea of having someone that's not of the establishment in there. And it's funny because watch him not get anything done. If he were to get elected, watch him not get anything done. All right, guys. If I don't see any other questions coming through, cheers to the next week. All right, so next week, I'm unavailable. My wife is going down for 9 to 13 days to spend with her mother through a hip surgery. So I am being Mr. Mom at home with 6 kids. Next week, I will not be doing a live chat session, but I'm going to start to throw out more of these 7 to 15 minute smaller podcasts, and maybe if I find the time, I'll get a commentary out there, but it'll be pre-recorded, just going over some things a little bit quicker. I could probably get through one of these in 20 minutes if I just went through my thoughts with you. So what I'll end up doing is you'll have to check my websites on Tuesday and Wednesday. Tuesday and Wednesday, I will just throw up under hurleyinvestments.com or my Hurley Investment is where I put my midweek chats. You'll have to grab to my website. I've tried to put in there a link where you can click on it once. It'll open up the recording and off you go. But right now, I'm not going to promise you anything just yet, but my expectation or my plan will be Tuesday to record something that might only be 20 or 30 minutes long, just going through what's going on and getting it out there so you'll have the information to know what's happening and why. Alrighty, in that case, guys, I appreciate you being here. Hopefully this was helpful to you. This session I am trying to post this evening. What I usually like to do is I try to post it so by the time you guys get up the next day, you'll have today's thoughts there in front of you, so you can listen to them, you can look at them, you can put me to the test, you can see how we're doing and why. Again, the big issue I'm trying to point out today, anytime you're up in a down market or anytime you can beat the S&P on a downward day, it's worth more than just that dollar figure. It's worth more than just $5,867. To the stock market, it was worth 40 grand today. And it's really important for you guys to understand that you make money on the way down to a certain degree of by not losing as much. And I think that's a big deal. In fact, obviously the better you do, the better it's going to be. And I think Disney is going to really make me look good next week. On the 10th, my clientele is going to be extremely happy when they see the returns from Disney, and that gets back up to the 115, 120 level. It'll make overall the portfolios look awfully good. So you can still get into Amazon. Bull call looks to have a good setup. You could still get into a protected put strategy on Disney and maybe have a pretty good return there as well. Thank you, Rick and Abraham. Always a pleasure to be with you too. I appreciate everyone else who's been here today. And guys, have a great week. I look forward to again, trying my new system out here, getting some shorter, smaller, especially on the down days, comments out there in a 7-minute to 15-minute video. And I hope that'll help you better understand where I'm coming from and how money is being traded, et cetera, et cetera. Guys, have a good week. I'll talk to you probably at least 2 weeks down the road. Bye-bye.